The firm is about $1 billion in size. We started from Caxton. We had left after the founder had retired at Caxton, and 3 partners from Caxton came together to start Lomas. And we were lucky enough that 2 other partners joined soon after. And so it is a tight-knit team that worked together for a very long time. Most of us, again, from Caxton, but now we've developed and about doubled the team to about 10 people. The culture of the firm is very much a family office type situation where the owners of the firm have a lot of skin in the game. About 10% of the assets are from the owners, and we are the owners of the business. So every decision is about creating returns for us and our investors. We're not about being the largest. We would like just to create alpha and generate returns over the long term. Our investment philosophy really started when I started my career at Morgan Stanley. I was lucky enough to work with Barton Biggs, who was a big thinker. And he always talked about large macro events. So we have taken that and turned that into looking at industries and seeing if there's a change in an industry, and using that top-down view then to pick stocks that develop the best risk-reward for our portfolio, protecting the downside while giving us a large amount of upside in our stocks. So our investment style, we are not either growth or value or core managers. What we tend to do is look for a large theme. So we would be thematic investors. And to be a thematic investor, you have to look at every company in an industry to make sure the theme holds for all the group. So in general, if we like looking at hotels, we would look at every hotel company based in the US and abroad and make sure that the sector trends of revenue growth, hotel occupancy, building of new rooms is all growing in the right direction. And then from that, we would take the list and look for the best risk reward. Rather than just the growth or value, we look for a risk reward to protect the downside and get the most upside from a stock. Well, the key to differentiating at Lomas is the team has worked together for a long time. It's basically a family-run business attracted to long-term risk rewards. We are about 10% of the capital of the firm, so we take a different view than most firms because our own money is at stake as well. I've been lucky enough to run money since 1992. At Morgan Stanley, we ran a concentrated portfolio called the Aggressive Growth Fund. And then I was lucky enough to go to Caxton, where again, we ran a concentrated long book that was about $1 billion. And then here at Lomas, again, we were running a concentrated long book for clients, which in all cases had about 20 stocks in it, and they've done well over the long term. Over time at Lomas, and dating back all the way to Morgan Stanley, we've always realized that our largest positions with the most conviction create the most alpha. So when we're running a concentrated portfolio, it lets us generate the best ideas for the portfolio and to create the most alpha. In the short term, our performance has been hurt by COVID. We were positioned for a growing global economy, but the virus quickly changed that. We had to readjust our portfolio to a more stable growth portfolio, which is usually the core of our portfolio anyway. So our largest positions have been concentrated even more. Even though in the short term, our portfolio has taken a downdraft, we have taken this opportunity to upsize our largest positions where we find the greatest risk reward. So we're optimistic, and we believe that our portfolio will generate a long-term alpha as it's done historically. Our largest position in the portfolio is insurance. we have 3 stocks that make up the largest percentage of our portfolio right now. What we're seeing is accelerating pricing in a hard market. So our largest position in the first quarter was growing pricing around 11%, while cost trends were going low single digit. In the third quarter, we believe that revenue trends will be close to 18%, with cost trends again still in the low single digits. So there's a lot of upside in the earnings from this. Our second is the Chinese internet. The reason that we like the Chinese internet is they've handled the virus well, the GDP is growing again, traffic is almost at or equal to where it was in the prior year. And so we believe that the Chinese internet has been pressured by political tension with the United States, but their businesses are doing well, and we believe this will be relieved after the election. A few years ago, we got really interested in video games as we saw that the Apple phone and the Google phones were monetizing for small transactions, or what people call microtransactions on the phone. We saw that big video game companies would soon take hold of that trend. The 2 stocks we selected in the video game industry were Take-Two and EA. In this industry, there's only really 3 large players in the US, so selecting 2 out of the 3 is really a large bet. So when we looked at them, we looked at engagement, and we found that Take-Two had the largest engagement on their games. So we thought if they started to monetize that, that would be a windfall for them. And EA, having all the sports franchises, or most of the sports franchises besides the NBA, we thought was a great way to play the spend here in the US as well as spend internationally in Europe and China. And we've held these for over 3 years, and then when we decided to exit is when Fortnite became so popular. When Fortnite became popular, it was a different monetization. It was a different company, it was younger kids, and so we exited the positions, probably too early, but we exited them because we saw Fortnite was taking so much of the revenue. It was actually making the large incumbent players like Take-Two and EA have down revenue in the year. We at Lomas take ESG very seriously. One reason is that ESG, if you're looking at the long-term value of a company, if they don't take ESG seriously, there's going to be problems. Number 2 is beneficial to us and our clients. ESG, companies that take it, that are socially responsible and take ESG seriously have outperformed the average indices over time. So those are 2 good reasons why to do ESG. For the long term at Lomas, being a family-run business, we have to take social responsibility seriously.